Hey everybody, this is Lance from ThetaTraders.com. I want to do a more of a vlog type post here. I'm not going to talk too much about strategies, but looking at how much your net worth is for investing over trading. So we have a lot of members at ThetaTraders.com. There's over 380 members now, and I have been talking to quite a few of them where they're trying to primarily grow their accounts via trading. They're not necessarily investing. And I think a lot of them are not necessarily sure where the risk is in trading over investing. So trading is riskier in general. When you're taking trades with a 3x stop out, let's say you're taking in $500 on a trade. If you 3x stop, you're losing 1,500 minus the 500 you took in. So you're looking at $1,000 loss there, and making sure obviously that you're not over allocating to any one trade, using about 2 at most 3% of your total account size on any one trade on a stop out would be preferable. I think most of our members actually do that, but just be aware that there could be numerous stop outs that happen over time. Now, based on just overall percentages and probabilities, you could easily get quite a few stop outs in a row, even if you have a low delta or highly probable chance. Let me open out the Pascal's triangle here. So just by doing it once, so we're going to start this off. This little cube has different dots of the probabilities, and then flip it over. So here you see a nice bell curve distribution. However, could easily get a few of these that are pretty far out in the expectancy. And there's a chance that you get more than one of these at a time. So in the whole trading mindset, you want to be able to think in the probabilities, do the trades, and then if it happens to stop out, just be aware that could have just been a short-term, loss based on probabilities, and also be aware that multiple losses could happen at any one time. And then think about how much you're using in your trading account versus just a long-term buy and hold investing account. I'm currently around 70 something percent in long-term buy and hold, primarily in the Roth IRAs. I've been maxing out my Roth and maxed out my wife's Roth when we got married, for about 17 years for mine and about 14 years for my wife. So it's a fairly sizable account there. And on my Roth IRAs, I primarily do long-term buy and hold, low-cost ETFs. It's about 80% of my Roth IRAs are stuff like SCHD, which is a high yield dividend account, SLYV, AVDV, those are small cap value accounts. And looking into building more into the dividend accounts over time, it's really hard over the long time period to not do well if you buy really strong dividend growth companies, hold on to them for many, many years, and reinvest the dividends. So I'm going to be looking at converting or moving into around 80% in long-term buy and hold, and then up to 20% in trading. I might even go even more in the long-term buy and hold over trading. Just me personally, since I'm a high school science teacher, been teaching for my 18th year now. Plan on doing that for another at least 10 years, maybe 15 to 20. So it's going to be a pretty sizable pension for me. And then I know that with the pension plus my Roth IRA and my wife's Roth IRA with very strong, low cost ETFs, it's going to be in a really good shape for retirement. The whole trading account that I have, while it would be good to obviously make it grow, I know I'm going to reach my goals very well just with the Roth IRA and pensions. So just be aware that I wouldn't necessarily put a ton of your total account values into trading. Be able to do the long-term buy and hold, just steadily buy in, month out For the Roth IRA, you could put up to $7,000 per person if you're under 50 years old. Just to make the math easier, I'm looking into putting in $1,000 right away, beginning of the year, and then you can just do 500 every month. 500 times 12 months is 6,000, plus the extra 1,000 that you started when you first did it, and then you max out your Roth IRA in a very straightforward way. As for trading, whatever funds that I could have in my budget based on first maxing out the Roth IRA, anything extra, I'll consider putting small amounts of trading. However, if the trading account ends up being, over 20% of my total net worth in my trading accounts, I'm going to look into just adding it into a regular brokerage account and then just buy and hold low cost ETFs as well, like SPY, SCHD, stuff like that. Another thing, when your trading account is going well, I would highly recommend looking into taking some or most of your profits from the trading account and then funnel it into those long-term buy and holds. Obviously, with the Volmageddon event in early August, it could easily dwindle. We were doing really well into August. We were up about, I think I was up about $10,000 off 50. 9,000 when I started, so pretty close, around 18% for the year. And then most of it was just gone after the volatility event. So just being aware and, sizing appropriately. If I took most of those gains, put it into, say, SPY, and then just stayed back with my original account from the beginning of the year, and also I would have sized lower at that point because I'm not going to be over allocated to any one position. Would have been less of a dent in that case. So again, just different advice here. Obviously, you can do what you want with your funds, but be aware of keeping that consistent investing. And then the trading is the bonus. Again, Lance with datashares.com. Hopefully this vlog type post was useful to you, and I'll see you guys on the next one.